Hello, everybody. Welcome to This Week We're Back. It's been a long week. Well, it's been a strange week being off with the flu. Still have a touch, but I'm well on the way to recovery. We did lose a market close, but we did not lose the this week's, which is fantastic. So I'm very, very happy to be here today with you guys. Awesome, awesome, awesome. So this here is the first of the month. So every first Sunday of the month on this week, that means we got some free memberships to give away. So we'll be doling those out throughout the show. I did drop one right off the top because if you look at that little green bar over on your chat that says gifted one Mountain Finance membership, underneath it, if you have another box, a gray box with a little link in it, that means you don't have free memberships turned on, which means you can't win. So if you want to win and you see that box, you got to click on it. You got to turn it on. Otherwise, you're not going to win. So hopefully you guys all have that on, and hopefully we'll get some good memberships out there, and we'll see who wins. It's always fun. It's like every time I drop it, it's like Christmas. We don't know who is inside the box, so that's going to be fun. Yeah, we got a good show. We got a bunch of news, of course, and I love the picture that we have over here on the side this time. The bear and the bull trying to play Twister. So that's definitely kind of cool. Also over on that image, you will see the Blossom sign. So Blossom is that social media app that is designed 100% for investors. Initially Canadian, we have added American as well to it, but it's fantastic. It's a place to go to talk about, well, stocks. What else would you talk about over there? You can link your portfolio. You can see other people's portfolio. You don't have to link it if you don't want to, but it's a great way to connect with a lot of people who are in a like mindseted manner. And of course, a lot of the Canadian financial YouTubers are all over there as well. So jump on. There's a link down below. Use that link. Go on over, sign up, follow me. I'll follow you back, and I'll probably comment on your stuff because that's what I do. I do like to comment. I may not comment on everything, but I try to comment on as much as I can. Holy banana bread. There's a good amount of you already in the chat. Let's quickly get caught up with you guys before we start hitting up the news. All right. The very first comment is gone, but it might be because it came in so early, and it was Jonathan saying, am I late? He does that every single stream. You're not late. You're always early. It is fantastic. All right. Now we got Ian saying, hello all. Hope I win a membership again. I don't know, Ian. Maybe you will. We'll have to wait and see what fate says. Sometimes fate is very, very fickle, but we'll find out. You know what? We'll find out right now. Well, you'll have more chances than this, but let's drop a membership right now off the top. Bang. We'll see who wins. Maybe it will be you, Ian. It would be actually really, really funny if it was. So, no, it's Vineet. Vineet wins. So Vineet has won a membership. Congratulations, Vineet. Up next, we have Bismarcky. Happy Sunday, everyone. And then, speak of the winner, we have Vineet with a happy Sunday. Hope you're feeling a lot better. I know we all missed you. I missed me too. So yes, I am feeling a lot better. There's still a little lingering cough, and I'll hit that mute button if I do go into a coughing fit or anything. Hopefully not. But I am using my voice this time a lot more than I have been. So we'll have to see how that goes. And Vineet is congratulating Sandra B. So the very first membership went to Sandra B. And then Vineet. Who could be next? Who could be next? I don't know. We're going to find out in a little bit. Jonathan says, yay, new month. Yeah, May. May is definitely good. Means we hopefully have the last of summer, the last of winter behind us. We're heading towards those better months. So let's see what the summer has in store for us. We got a lot. Well, there's a lot that this summer could have in store for us, especially as we anticipate those rate cuts. And we're going to talk about those. That's our number one story. Harold is saying, let's go. Yeah, absolutely. Prairie's in the house. We got Terry Crow in the house. And here's Sammer. And here's John Locke in the house saying, happy Sunday all. Always good to see you, John. I did take a gander. I was taking a gander at them Russell at the Russell Index, and there's not a lot of Canadian ETFs. Now, the best one I found was XSU, and I think that was came up last week. Now, if you're looking at U.S. stocks, though, there are definitely a lot of different indexes on the U.S. side. But on the Canadian side, XSU is probably going to be your best play when it comes to the Russell 2000. Now, if any of you guys know one that I did not find, feel free to throw it into chat, and we'll take a look at it for John as we progress through the day. Stan says, happy Sunday all. And Terry says, whoops, about emoji, meant to say, hi, everybody. There we go. Jay is in the house. You feeling better? I'm getting there. But I got my good old buddy coffee here with me in the good old Starbucks reliable mug. So we will have some sips of that from time to time as we go through the thing. All right. More let's go and congrats. There we go. Look at this. Look at this. Look at this. Holy cow. Definitely. You guys are so supportive. It's awesome. Bismarck, he says, sell in May and go away. That's one of those things. Well, typically the summer tends to be a little bit on the light side. So, it's not a wrong saying. It's not a wrong saying at all. But I look at it this way. The summer is also not a bad time to be DCAing into your account. So, and plus this summer we go with the cuts coming or not coming, whichever it is, we have a lot of stuff going on in the summer. So I think it's going to be really kind of cool. And John says, thank you. I appreciate you. Thank you. Thank you for saying that, John. I appreciate you as well. Ian says, I will ask a bit later, but I'm interested in your thoughts on the ENB earnings report coming up. Enbridge. Jay says, how low will TD stock go? Lower. It's still got a little bit to go. The controversy going on in the States, all of that money laundering stuff has not helped them one bit. So, yeah, if you're already an investor in TD, DCAing at this point would not be a bad idea to average down because they are going to come back. But if you're a new investor waiting, I'd probably hold off. I'd probably wait a little bit before starting to get in because I do think they have a little bit of a way to go down. Now, I have a fun little story for you guys today. A $10 bill right here. It's actual real money. It's like I haven't seen one of these in a while. So I don't carry real money on me. I never do. Like quite literally, if somebody were ever to try to mug me, they're going to be very disappointed. But here it is yesterday. I come down for lunch. I come down, I sit down. My part of the couch is right next to the window. So I'm just glancing out the window, and there on the front lawn, there's a $10 bill just sort of moving along a little bit on the lawn. I'm like, oh, okay. So I get up, I go out, I pick it up. It's kind of funny. Like, I know when I was younger, I used to find money all the time. But quite honestly, it's probably been 20 years since I have found money outside. And the fact that I found it from inside is like absolutely hilarious. So, so, that's, I guess right now, that's my lucky $10. That's a really good return on investment, right? Because I started at zero. So, that's kind of like an infinite money thing. Because, $10 is infinitely more than nothing. So anyway, funny little story. I thought I would throw that in there for you guys. Abalash says, do you think the TSX market stocks will be more impacted from the Bank of Canada news or the U.S. Fed news? Honestly, I think they're more impacted by the Fed. It's one of these things that when the Fed and things start going wrong on the big markets, on the U.S. markets, it usually trickles. It almost always trickles right into the TSX. Sometimes it doesn't. There are some times like, was it last week when we had a couple of those really red days on the U.S. and we had slightly green days in Canada? But I think the market in the U.S. really, really does impact us. So we have to take a look. And Jonathan says, now the lawn is paying dividends. Oh, I sure hope so. I'll expect another one of these lawn next month. Keep them coming. Keep them coming. All right. Well, this is a perfect time to jump into the first story. But you know what? I kind of like giving away memberships. Let's just drop one more before we jump into that first story here. All right, I'm just clicking the buttons. Do 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 do. Here we go. Who will win? Who will win? I don't know. I have no clue. Will it be Ian? We'll find out here in two shakes of a lamb's tail. It is Abalash. Abalash has won a membership. So not Ian, but Abalash. So, maybe today, um, Ian is the new skivs. We'll have to see. All right. Let's pull up that first story. And boop-a-doo, have to put up my little picture here of our good old friend Tiff Macklem. So we get a lot of rate cut drama that's going on, and that's fine. That's fine. So this week, and this all ties. I'm kind of doing two stories at one here. First of all, we had the Fed rate hike, not rate hike, but the Fed rate meeting this week, and they kept their interest rate steady, just as we expected. So it is still sitting at 5.25% to 5.50%. And that's a rate that they have held since July of 2023. Somebody did ask me, why is it a range? Why is it not just a single number like we have in Canada? And the reason for that is that with the US, the Fed likes to keep it as something, they call it the current rate target range. And that's why you have that little bit of a range. It basically means that depending on crises and little things that happen in the market or in the financial sector, it gives a little bit more lenience for the banks to move things around a little bit as needed without the Fed having to step in. So that's kind of why they do a range in the States. So just a simple little thing, but that's why you see it, which is kind of funny. I guess in Canada, it's a lot more straightforward because we're a lot smaller, so we don't need a range. So anyway, just keep that in mind. Now, when they held their statement, it actually wasn't bad. So the market was nice and green. They liked what Papa Powell had to say. So basically, he stated that they do not expect it will be appropriate to reduce the target range until it has gained greater confidence that inflation is moving sustainably towards that 2%. Fine, that's fine. That's consistent with what he's always been saying. The reporters tried to get him to admit that there could be a potential rate hike in the future, and he shut that down pretty quickly. And he said they're not currently looking at any possible rate hikes. Now, they did say that they're not going to lower the rates until inflation confidently starts to come down. Powell still expects inflation to decrease, mainly because he does think that within the U.S., they're looking at the shelter costs starting to cool down. So that's a big prediction in the U.S. That's what we're looking at. Now, in Canada, of course, we have been getting much better results when it comes to inflation. And that brings, of course, our question. Should Canada cut rates before the US? And I hear a lot of the trolls out there saying, oh, no, it will be financial chaos if that happens. What are we going to do? So we'll look at that here in just a moment. So right now, the Bank of Canada's benchmark interest rate, so as you guys know, it's at 5%. So we're already a little bit lower than the US. Here's the thing. Tiff Macklem was asked directly about this, and he came up and said, look, it does not need to mirror monetary policy from other central banks around the world, which of course includes the US. So he said that there's actually a limit to how far they can diverge, and that we're not actually close to that limit. So we do have some breathing room. So if we were to exceed that limit, then we do have a real fear that the gap would weaken the exchange rate between the USD and the CAD. And of course, the reason that it would weaken it is as that happens, investors start to push more money towards the American market opposed to the Canadian market to take advantage of those higher rates. So right now, the loonie, I think it's around 70. Oh, is it 73? 73, 74, somewhere's in that area right now. But it has been sitting anywhere from 72 to 76 US. And that's quite a range, but it's a safe range. Now, a lower exchange rate for the Canadian dollar, uh, this is kind of that danger. The thoughts are that, if we lower the exchange rate, the Canadian dollar will make imports from the US and other global markets more expensive. So that's kind of the whole issue. And if we have all of our imports being more expensive, that drives up prices and that makes inflation. Simple as that. So here's the thing. According to most economists and according to Tiff Macklin himself, we we have a little bit of a buffer here. In fact, even a gap of 100 basis points is not it's not that unreasonable. And sometimes we have been at that without any serious issues. But now we go beyond that. And then we have problems. So what can happen here? And this is kind of what I'm thinking. I don't know if it's going to be June anymore. I'm still going to hold on to June, even though I think I'm about 50-50 between June and July. I think we'll see one rate cut between whether it'll be June or whether it be July of 25 basis points. And then I think they'll let it hang for a little while. They might come in with a second one in the fall, even if the US hasn't cut yet. But I think the US will cut probably in the late fall to early winter. So it's going to be an interesting thing. I think we can actually do a little one. And that's going to be good because anything we can do to lower down our rates is going to make that tsunami of mortgages a little bit better. Because keep in mind, this is a uniquely Canadian problem compared to the US. Because with the US, when they had all them great rates during the pandemic, well, people could lock in for a lot longer. Here we can lock in for, 3 to 5 years type thing. In the US, you can actually lock into like 30 years. And a lot of people did with great rates like that. So they don't have that avalanche of rate renewals that we have in Canada. So things are a little bit easier for them, which is kind of an interesting thing. What do you guys think? What do you guys think are going to be, when do you guys think we're going to see that rate cut? Are you guys in the June, July camp, or, are you thinking later in the year? Now we're talking for Canada, not the US. The US, I think, will definitely be later in the year. Anyway, hit me in chat. Let me know. I am very, very curious. Okay. All right. We got Abalash is in here. Terry says that $10 bill was likely from a Starbucks utterance on your part. Maybe. The Starbucks bot is hot. Bot. Bot. I meant bot. The Starbucks bot is hiding in my lawn now. So I just have to say Starbucks enough and another $10 will come floating out onto the lawn. Oh, that's fantastic. I like that idea. Ian says, I don't know if I can win because I still have an active. Oh, dude, wait a minute. Yeah, you can't win, Ian. You have a membership. Oh, my God. I should have noticed that. That's hilarious. So, yeah, no, you can't win. Oh, my gosh. That is funny. Abalash says, thank you, Candace and Prairie Investor. And Ian saying, I predict August at the earliest. Okay. It won't be August. I can 100% guarantee you it's not going to be August. And the reason I can do that is that there's no meeting in August. The Bank of Canada does not have August. It goes June, July, then they jump to September. So no August meeting. There's also, I think November. I think there's no meetings in November as well. So just one of those fun little things. Bismarcky says, July is my bet. Prairie says, I'm still bullish on a rate cut in June. Okay. Yeah. And like I said, I'm 50-50. I really would like to see the June. I think that would be good for the Canadian economy overall. But I can also see Tiff being of that type to say, well, we're ready to do it. We're ready to pull, but let's just give it one more month. I can see him doing that. I really, really can. So we'll have to see. But yeah, I think that could happen. So there we go. Ian says no August meeting. Guess September then. Okay, fair enough. Yeah, we could be looking at a September. All right. Yeah. We'll have to look. We'll have to look. All right, let's jump to the next story. We'll get the news out of the way, and we'll, of course, we'll go. I feel pretty good right now. We can go. We can go quite a while, I think. All right. So I call this one "Here is a Hammer." So, or did I call it that? Oh, I called it Trades 101. Originally, I called it Here's a Hammer. I don't know why I changed it. But anyway, so Ontario has come up with this new program. They're going to launch it to encourage high school kids to enter into the trades. So it's basically, they're calling it a Trades Fast Track program. It's designed to get more high school students into different trades. They're offering grade 11 and 12 students the option of spending 80% of their would-be class time in, well, apprenticeships. So they're going to offer about 144 different trades. Now, keep in mind, these guys still have to take some of the regular stuff. So they still have to take like math and English. Well, math will help you in the trades anyway. So math is important. Now, why, of course, are they doing this? Well, it's because we have an issue in Canada with a labor shortage. So the skilled labor shortage across Canada, it's been sort of building over the last few years, and we're at a point now that 700,000 of the 4 million current tradespeople are set to retire by 2030. So we're going to have a massive problem if we are not ready to backfill these people. So yeah, things will absolutely get really, really bad if we don't have people ready to come in. So Ontario's labor minister, he's saying that in order to meet the infrastructure demands, the province needs, well, 500,000 more of these skilled workers over the next decade. And that's kind of what this whole program is about. So this shortage of skilled workers in Ontario and across the country, it's going to have a major ripple effect on everything from housing prices to even bus fares, and could be driving up the cost for many Canadian households and businesses. So this is a great way to create our own version of inflation hell, we'll call it. One report found that small Canadian companies lost $38 billion in business due to labor shortages in 2022. Now, while Canada's overall economy as a whole has lost about 13 billion the same year because of a lack of manufacturing workers. So definitely not a good thing. And, experts are saying that even that a shortage of mechanics, for example, has driven up the cost of public transportation and air travel, while a lack of construction workers have been a major factor in, well, you guys guessed it, houses, of course. That's why it's taking so long to get them built. So we got to push the students, at least those are ones who are looking to go into the trades. And honestly, nowadays, I think if you went through trade school, you're going to have a much better salary than if you went and took like a liberal arts degree or something. Unless you have your designs on going into, and I would say anything, even just getting a bachelor of anything, you're probably still better off to go into the trades. But if you're looking to go into something like highly professional, for example, if you want to get your doctorate in something, or you want to go into medicine or become an engineer or something, then yeah, that's the route you want to take. But there's some really good money, really good money. Of course, the super good money is probably in Calgary here in Alberta, so you may have to move, but just something to keep in mind. All right. Mohammed says, hi. So load more on Canadian REITs. Yeah, so Canadian REITs. Right now, like I said, as we're at the point where the rates are no longer going down, we're basically bottoming out most of the REITs. As in, I think they've already bottomed, and that's a good thing. That's a good thing. It means that right now we're at that point where it's kind of good to, it's kind of good that if you're looking to make some money on REITs, now is the time to be dollar cost averaging into them and getting ready for them to recover. Because as those rates start to come down, that's going to be very good for REITs. And I think very good for people investing in REITs as well. Now, it really depends on, of course, this is what I'm going to say. It depends on what you want out of the REIT. Like for me, as a total return investor, REITs are more of a passive income move, but because they're so depressed, there's going to be a lot of growth. So they're going to be a great, probably for the next couple of years, they're probably going to be a very good total return stock. So definitely loving the REITs. Ian says, I taught a 19-year-old male how to change a tire on Friday. Young people are different now. There we go. There we go. It's actually funny. I got to watch somebody change a tire not that long ago. It was because, yeah, I blew it. I blew the tire. It was in driving school, and I had to make some swervy movements, something we wanted to do. But the tire blew while I was doing it. So, yeah. Anyway, the instructor guy had to change it, and it was fun. It was fun, definitely. Prairie saying, trades equal a level of job security. Yeah, absolutely. Absolutely. You take, and here's the thing, even, let's say carpentry, and I always go to carpentry because I find carpentry is kind of cool. But I mean, let's say you become a carpenter. I mean, not only do you have a job probably for life, but look at the stuff you can do around your home. Imagine if you're a carpenter, right? And this is what I would do as a carpenter. If I was a carpenter, I would look at I would look for houses to buy that were in absolute disrepair. Then I'd fix them up myself and then resell them. And, because you could drive the market value up by, with your skill set. So that would be just something I would think about doing. Prairie says Northwest Health and PLZ had a slight bump up last week. Nice. Very nice. Yeah, and it's like I said, it's going to be one of these situations. Like I think most REITs, the only REITs I'm a little leery about is if they're basically a REIT that's not filled with nothing but office buildings. There's probably going to be a little bit less of a surge than residential REITs or REITs that at least cover across. Have good diversification. Now those office REITs, I think they're still going to go up. But they're not going to go up as fast. That's kind of the way I look at that. Abalash says, I am swing trading Canadian utilities and BCE. Do you think stocks on the TSX will go down further, considering the U.S. may go into a recession? The U.S. is not going into a recession. Right now, the U.S.'s economy is still too strong. Yes, they pulled back a little bit on their GDP, but they're not close to going into the negative. So there's no, I'm not going to say there's never going to be a U.S. recession, but there's not going to be a U.S. recession probably at least within a year, if not longer, if even one comes until, somewhere's down the road. But don't worry about that. Do not worry about that at all. And here's the thing, and I will say this again, there's a lot of finfluencers in the US that love to basically, it's like doom scrolling when you look at their titles. So they love to clickbait you and come in with this whole, oh my God, we're going into a recession. It's horrible. Oh my God. And, the sky is falling stuff. But I mean, of course, when you're scrolling through your YouTube and you see something like that, you're like, oh my God, really? I got to look at this. And, kind of like, and I hate to pick on Meet Kevin, but I'll pick on Meet Kevin again. I mean, even when the stuff was happening between Israel and Iran, he was like calling all of his videos World War III, and then what was going on. I'm like, no, it's not World War III. But yeah, I mean, some YouTubers will do whatever it takes to get that click. And I'm pretty guilty as well. I mean, I still make sure I deliver on the question I put in there, but sometimes I'll word things in a way to make people a little more curious. But that's part of the YouTube game. You kind of, if you don't do it, you don't get the clicks. That's kind of the way it works. All right, Jordan's in the house. Hello and good afternoon, all. Good to see you, Jordan. Hope you're having a fantastic afternoon. Mohammed, I'm an industrial mechanic electrician working 2 jobs, and I get a dozen of job offers every week. Totally agree with you. Yeah, absolutely. And quite honestly, most people in the trades right now, they have as much work as they want. And if anything, they're probably turning some of the work away. So just something to keep in mind. Vic's in the house saying this is happening. Ian says, I am also an industrial mechanic. Nice, nice, nice. Vic says, I swing traded CSU about 20 shares. Well, very good. Hopefully that works out. Hopefully that works out. And Vic says, wild daily swings by $100. So profited cash account. Don't worry. All right, cool. Did you have a blood clot? Say it wasn't. It wasn't. Was it? Well, no, I had a blood clot last year. Last year, I had a pulmonary embolism. So I had to go on blood thinners to get rid of it, which is why I now have to exercise and I have to do a whole bunch of extra stuff to make sure I don't get any further clots. But yeah, hopefully no more. Let's have a Starbucks. That's good. Let's see. Vic says, what about TD stock? Should I swing a 1,000 shares? Well, right now, I think it's still going down. So here's the thing. If you're looking to swing, I would say your entry point is still in the future because, they're still gonna have that thing where they come up. Brian says, Candace, have you ever told me a lie in all the time I have followed you? I don't think so. I don't think I have, but the way I look at it though is that keep in mind, if I say, okay, I think the stock is going to go this way and it goes the opposite way, it doesn't mean I was lying. It just means that's what I thought it was going to do. But yeah, as far as I know, I hope not. I certainly hope not. Yeah. That's a funny question, Brian. That's makes me want to give away a membership. Let's do that. All right, give me a moment. Boom, bang. Here we go. It's coming up. Let's see who's going to win. All right, here we go. All right, that was there we go. And Brian says, Candace, you have never told me a lie. It was meant to be a question. It wasn't meant to be a question. Oh, okay. There we go. Because I was worried for a second. And look at this. Look at this. It's like karma paid you right back and gifted you a membership. Nice. There we go. And Ian's like, if I don't win, it's rigged. Ian, you can't win if you've already got a membership. It's just one of those things. Harold says HPS.A fell like crazy. Yeah, they did have a fairly big correction, but it's part of it too is a lot of that sector, especially, and we'll talk a little bit about that when we talk about our GPD, our GDP. There we go. Our GDP story. When we talk about that, we'll talk a little bit about that sector because that sector has been hit pretty heavy, and at least that sector helped pull the GDP down a little bit as well. All right. Brian says, Prairie says, congratulations to Brian. All right. And we have another story. So you guys have probably heard about the Loblaws boycott. So it's a boycott that began on Reddit, and it's basically a 1 month boycott of Loblaws, and it began this week. So I think it was May 1st that it started. So it's for the month of May. So fed up shoppers, they're looking to protest the high grocery costs. Now, we don't actually know how many people are taking part in this boycott. The actual Reddit group had about 58,000 members. So really not a lot. So it's kind of, I don't think you're going to notice this boycott. I don't think Loblaws is going to notice it, other than the fact that it's been getting publicity, and that's certainly true. Now, the group, they do have demands, so they're looking for reducing prices. They want them to sign the grocery code of conduct. They also want them to identify shrinkflation and look at capping prices on essential goods. So there we go. That's kind of what they're looking at. But like I said, I don't think this is going to really bother Loblaws too much, other than, the news stories will certainly hit them in the PR spot for sure. So not a great public relations story for them, but it's kind of an interesting thing. Now, in a way, Because I mean, all of them are doing the same thing, but Loblaws was kind of been singled out. They're being villainized. And that might be because Loblaws, when you trace them all the way back, it all goes back to the Westons. And they were like, like uber rich founders of Loblaws and Superstore and all of that. So Weston Foods. Yeah. So that's kind of the whole thing. Now, the interesting thing is most studies have said that the rising costs are coming from the suppliers and not really rising the profit margins for grocers like Loblaw. So, and that may be, the whole fact that the suppliers have been increasing the prices like crazy is a huge part of what this inflation that people are seeing. Now, while food inflation, it is trending down slowly, high prices are still going to be a major problem for many. Food bank usage, it's pretty much sitting at an all-time high, which is sad. Which is sad that people are having to go to the food banks, and yeah. Also, one of the things though that concerns me more is that a lot of Canadians have been eating potentially unsafe food. So food that you would normally throw away now because of the price of food, you're like, well, yeah, this meat smells a little funny, but let's just cook it anyway. So that's kind of one of those things that that has been happening. It's kind of sad, but what can you do? What can you do? And Abalash says, did you see open text fall? It went down almost 15%. I saw that. That was amazing. I think Kevin actually had messaged me about it. And it's like, I just bought a bunch because it fell big time. So yeah, I mean, I'm still pretty bullish on open text overall. But yeah, that was quite a fall, quite a one-day fall for sure. Vic says many stocks getting punished, by 20% due to recent earnings. Yeah, earnings have been interesting lately. That's definitely for sure. Brian says, I don't know how many people are boycotting. I don't think it really, not enough to make a difference. And keep in mind, even if the Reddit group has 58,000 who are all like, yeah, let's boycott them. How many are actually going through with it? So I doubt all 58,000. Vic says, let's see, Otex, Enkhouse, and so many. Yeah, but they will recover. Exactly. There are 8. That's funny. Bismarck says, I'm sure the Westons will be fine. Yeah, absolutely. Appalash says, anyone interested in investing in a grocery co-op, the Banana Bread Company factory? There we go. That's something I'll put my money behind for sure. Brian says, no doubt. And Prairie says, I believe rising prices was due to suppliers if Loblaws hadn't reported record profits. Yeah, but keep in mind too, they did at one point say that a lot of the records they're making on their profits is actually coming from the non-food things that they're holding. Now, I don't know how true it is, but this is one of the claims that Loblaws had made, saying that their pharmacies have been making incredible amounts on pharmaceutical products or pharmaceutical adjacent products. So we have to see. I think there's probably something that they can do, but I'll give them the benefit of the doubt for now. John says, increased fuel cost is not helping for our cost of groceries. No, absolutely. I mean, the suppliers are raising their prices. The carbon tax is increasing the cost of the fuel to get the stuff to the groceries. Yeah, I mean, this all gets passed on to us as consumers. So you have to look at it this way too. So let's say the cost on a loaf of bread. So I think I have no clue how much a loaf of bread costs. Let's say a loaf of bread at the store cost you $2 before the pandemic. So we'll say that the grocery store gets it for $1. So, because, a lot of times the markup is double. So if a grocery store gets it for $1, all of a sudden, let's say the manufacturer gets 50 cents, and we'll just make it easy. The manufacturer gets 50 cents, the transportation gets 50 cents. Then that $1, it goes to the store. So we'll say that's how it's working. So what ends up happening if all of a sudden the supplier wants 75 cents and the transportation wants 75%, that's $1.50. So instead of the store selling it at $2, for them to maintain the same profit margin, they got to knock it up to $3. So, it kind of is one of them interesting things. But here's that thing. So, in a sense, the grocery store, even though they're doing the same markup, because it's bigger on the back end, the markup is they're actually making a little more money on that, but they're still doing the standard markup on it. So we'll have to sort of see. That's kind of just the way grocery and retail tends to work. It's even worse if you go to clothing. Like the markup on clothes is just absolutely insane. Like it's bigger. It's not like they're doubling the price. It's like it's one of the reasons that if you ever look at a food store, a clothes store, they always have these sales on because their prices are marked up so much they can have huge sales and still make a ton of money on it. Prairie says, I doubled down on ANGH last week. Nice, nice, nice. Vic says, I hold TD long term, so might just buy and hold instead of a swing. Okay, that's fair enough. That's fair enough. At least now you're definitely probably averaging down. Prairie says, I'm getting tired of industries using the pandemic as a scapegoat for marking up prices. Yeah, that's like, well, the pandemic's behind us now, so forget about the pandemic. If you're marking up prices, shame on you if you don't have to. It's like, here's the thing. I look at it this way. When there's pain, so when there's economic pain, I don't think it's entirely 100% fair to pass on 100% of that pain to the consumer. As that middle person, so as a grocery store or retail store, eat a little bit of the pain, right? Eat a little bit and give, I'm not saying go 50-50, but at least eat a quarter of the pain or something. Take some of it away before you pass it on. But I know, as and this is kind of funny thing, so we're looking at it from two different views, right? Because as consumers, it absolutely sucks. But when we look at our dividends and our shares, we're now at that other side where it's like, yeah, keep those profits coming in so that we're still getting nice dividends and we're still getting good returns on our stocks. So we're kind of have both directions. All right. And Lisa's in the house with a hi, everyone. Abalash says, but apparel retailers sell less frequently. You can make more with frequent but small gains. Grocery retailers make. Yeah, absolutely. No, it's true. That's the thing. Yeah, you don't sell as many clothes. So having that extra big markup certainly helps. Or, if you want to really go far, just go up to like somebody who sells cars. The amount of retail, the amount that's on that, like it's like, you sell a car in a day as an employee, you've done good. So just something to keep in mind. Brian says, I think HDIV and HYLD raised their already enormous dividends. I believe I heard that HYLD was doing that. So I didn't hear about the HDIV, but it doesn't surprise me. And Prairie saying, so true, absolutely. All right. Before we jump into that next story, you know what? Let's drop into the membership. Let's just do it. It's coming. Here we go. I just have to hit the buttons and see what happens. All right. While we're waiting for that, John says, these companies have us conditioned to these companies have us conditioned to these new prices, and they won't lower prices in good faith when they can make higher profits. We need not-for-profit grocery stores. Yeah, that would definitely be nice. Now, Change to Spare. Congratulations. You won a membership. Very, very cool. But yeah, that's kind of that whole thing because everything is for profit. And keep in mind, a lot of the things that we have here, we're, kind of in an oligarchy type scenario where there's just not a lot. Like if last week we covered that story on the grocery stores where, the 5 of them were basically controlling 80% of the food. So, we definitely need to see things like that change, but it's hard in Canada. It's just really, really hard to get that in place because it's already been designed. The whole system is so designed that it's really hard for anybody to come in new and make a foot. So it's definitely hard. Adrian says so. Maybe, I don't know. I haven't I don't regularly watch Adrian just because he's kind of pure passive income and I'm more total return. I watch the occasional one if he's talking about something I think that's really kind of like overlaps into my interest. Prairie says, congratulations, Change to Spare. Brian says, I feel bad. I own Loblaws. Uh-oh. Well, don't feel bad about it. It's a kind of a bit way business works, right? Um, John says that would be a utopian society. Ah, there we go. Good old utopia. All right. Let's jump into that next news story as we just start pulling things down. Um, all right, I mentioned a little bit about GDP, and that's what we got here. So we had our month over month GDP information came out, and so this time around it was for February. Now we expected a 0.3% GDP, so not very much above zero. But we did worse. We actually came in at 0.2%. So that's a big drop. Last month we were at 0.5%. So, and here's the funny thing too. Already they're looking ahead to the March numbers, and the early estimates are expecting basically a similar number. So probably another 0.2 at this point. So we'll have to see. So this loss of momentum, it's basically putting a lot more pressure on the Bank of Canada to what? Well, to cut interest rates. So we're looking at there's a lot of pressure there to get a cut going in June or July. But yeah, all right. I'm going to go with 55% June, 45% July. I'm really, really pushing to. I really want to see the June happen. So here's the thing. For this to happen, of course, we basically need to see that inflation is continuing to cool. So I think we still have one CPI left. So that one will really determine what's going to happen. So if that CPI is moving in the right direction, we'll see it in June. But if it's flat or even retraces a little bit, then we're probably looking at July. So, or later if we can't get the next one after that back into control. So when it comes to our GDP, we did have a few highlights. Now, there's a reason in the little image over there. There's a reason I used a train, and that's because, well, the best sector in the month was rail transportation. They were actually up 5.5%. Not far behind was air transportation. They were up 4.8%. And also, there's kind of a transportation theme here. But overall, transportation and warehousing was up 1.4%. And even pipeline transportation, so moving our oil, they were up 1.6%. Now, the utilities and the manufacturing sectors, they saw some very significant contractions. And that's, of course, where, HPS.A and HMM.A, they fall within that manufacturing sector. So they definitely experienced it. Maybe they even powered part of this. But overall, though, we have about 20 sectors. We have about 20 sectors in Canada. 12 of them experienced growth. 8 of them contracted for the total that we had. So not so great. And but these guys are going to bounce back. And as far as Hammond goes, like I said, there's people lining up for Hammond services. So I have full faith in Hammond. It's just a matter of it's not even a matter. It's just right now we've got a dip happening, and it's not a bad thing to be buying into. Not a bad thing at all. So I look at it that way. And even right now in the 0 to 100K challenge, Hammond's still up at the top. It's still up there. I'm not going to say if it's 1 or 2. You'll have to watch that video to find out. But it's up there. All right. Let's see here. Where were we? There we go. I think fall at the earliest. Okay, so Lisa's thinking no rate cuts until the fall. All right, so that would be October or December, because we don't have a meeting in November. So we'll have to see. Well, technically, yeah, I guess December, if it's early enough in December, it's technically still fall. Ian says, you were saying summer is a slow time for stocks. Maybe a summer rate cut would make sense. Don't want to overheat the markets. It does. I mean, it does make sense. Well, the nice thing about a summer rate cut, whether it be June or July, is that because you've got no meetings in August, it means there's no real pressure. You can just do that one cut and you can sit back until the fall. And let people sort of let the economy enjoy the benefit of those slightly, it's probably only going to be, a 25 basis cut. So let the economy enjoy that. Let the, you know, and that also gives you, and also here's the beautiful thing too, because you've got that delay, it gives you time to see whether or not it's working out. Because if you, let's say you cut 25 basis points in June, um, you let it, let it go for the summer, and you notice inflation is starting to go in the wrong direction. Well, in a case like that, you can then say, okay, well, let's not cut any further. We'll see if we can still get where we're going on. In this case, it would be a 4.75 interest rate. Or worst case scenario, if it really did start rising, they would then have to come back and bring it back up. But I don't think that would happen. I think because here's the thing, part of the GDP package and part of the CPI, well, part of the CPI is being caused by higher rent. Higher rent is now at the point that it is kind of being pushed up by the higher interest rate. So bringing that down a little bit should bring that down a little bit, which should sort of create a little bit of a condition where inflation keeps moving in the right direction. So we'll have to see. Bismarcky says, I'm buying one HMM share every day. Oh wow. I'm not buying one every day, but what I am doing is I am at least every little bit here in the stream, I'm dropping a free membership. So we'll drop one more before we go into the next story, and let's see who wins. All right, here it comes. Keith Joy. Keith Joy is our winner. So congratulations, Keith. All right, let's jump into the next story. Well, we're almost through the news. But yeah, so the Trans Mountain expansion has opened up. So that's good news. That's good news. So it does seems like, holy banana bread, they've been working on this thing for I bet it's been 10 years, but now it has finally opened this week, and it's going to create a huge boost for Canadian oil exports. So crude exports to oil refineries in the western U.S., also in Asia, these are expected to nearly triple once this pipeline is fully operational. So it's turned on. It's not fully operational, but it's getting there very fast. So this is a government-owned pipeline. It's going to be interesting. It's coming on basically during a year when the Canadian oil production is expected to hit some record highs. So very good timing. It is thought that this project will be profitable to the tune of $4.2 billion up to $8.6 billion over the next 20 years. So that's not too shabby. It is expected to add $9.2 billion to Canada's GDP and generate an additional $2.8 billion in tax revenue over the next 20 years. So that's absolutely fantastic. Now, I have to tell you the critical side. Of course, some critics are saying, well, hey, this is all great as long as oil stays in demand. But what happens when the overall oil demand falls? And then lower quality Canadian crude becomes less attractive on the global markets. Well, yeah, that wouldn't be good. But here's the thing. I don't see this happening anytime soon at all. Just something to keep in mind. I think oil is going to remain strong for a good time. We're not ready. Like the world, as much as we talk about EV and we talk about moving everybody off of oil, well, the world's not there yet. It's going to take a while. And as long as, plus oil's, there's only so much oil in the ground at the same time. So, you put all of that together, I think we don't have a lot to worry about at all. All right. Prairie says, congrats to Keith, who won a membership. Redwater. Hello, Redwater. Good to see you. So if the Conservatives get elected, they will sell it to the USA capitalists. Why? I don't know. Well, to me, I look at it this way. From Canada's perspective, as long as we're getting a good price for our oil, we can sell it to anybody, really. But here's the thing. It's probably easier to transport to the US. If they want to buy it, feel free, just as long as we're getting a good deal. Ian says, how will the new pipeline affect Enbridge? Um, that's a good question. Because yeah, Enbridge themselves, they also have they also have pipelines. So um, I don't think I think right now the fact that there's a ample demand, I don't think it's going to negatively impact them for that reason. So I think we're fine. I think we're fine. I think Enbridge is fine when it comes to this. Enbridge also has a really good network, especially on the eastern side of the country. So yeah, they're going to be fine. Andre says hello, hello, Andre. Good to see you. Norbert's in. Norbert. There we go. Sorry about that, Norbert. Norbert says long oil. Yeah, absolutely. And Red, you're on par. Exactly. We need to open our own refineries. Yeah, absolutely. I mean, when we produce as much stuff, like for me, I find this to be silly. If we're producing something and we have to then send it to another country to refine it and then buy it back from them if we need some for ourselves, that's crazy. Yeah, let's get some refineries built in Canada for sure. Prairie says, hopefully some of those billions trickle down to us investors. Yeah, absolutely. Or at the very least, at the very least, it gives the government more money to at least try to get the economy back in shape. Now, the beautiful thing is that at least with a conservative government on the incoming, hopefully they're going to be very fiscally responsible. Terry says, whoops, Loblaws rocks. 3 years ago, I sold Loblaws to buy to TD Bank. I got a small business inside of Atlantic Superstore. I remember Mr. Weston shaking everybody's hand that day. It was truly electric. Well, there we go. There we go. Whoops. Red Investor says the investor is the taxpayer. Well, it's true because we have both sides. Now, you keep in mind, if we're getting taxed to death, but we're making record profits, we're still probably losing because the taxes are going to be a lot more than what we're actually making back from our investments. So always something to keep in mind. Well, unless you're really, really good, but that's another story. Brian says, I helped build the thing. I'm looking for work. Oh, did you really? Oh, that's very cool. That's very cool. Well, hopefully you find something. Red says they sold them to Petrocan Hibernia Oil. Okay. And let's see. The Cons also sold the Trans-Canada Pipeline. So, yeah, it looks like, it's one of these things. I just look at it this way. As long as, here's the thing about the pipeline, right? If you sell it, then you don't have to worry about the costs of maintaining it. And as long as it's still transporting all of your oil, you're able to sell that. There's still a lot of income that can come into it, but it has to be something that makes sense. I think right now, if it makes sense, I'm okay with that if it makes sense. Let's see. Ian says all this talk about TD reminds me I have clothes in the dryer. Okay, fantastic. I don't see the connection between TD and your clothes dryer, but why not? Why not? All right. Let's pull up the next news story. All right, so those of you, holy banana bread, look at Tesla. So Tesla had their earnings report last week. We got a bit of a bump from that because people were a little happy with some of the things Elon was saying. And then Elon took a surprise trip to China and ironed out a deal. This is actually pretty huge for Tesla. So their shares, because a lot of people recognized what was coming down. Their shares jumped by 15.31% on Monday because news broke that China removed their restrictions for driver-assisted software. So this, as I said, this could absolutely be huge for Tesla. And it basically means that Tesla's self-driving technology is really, it's not very far from rolling out in China, which is exciting. One of the reasons it's exciting is, well, China's the largest EV market in the world. So that's really good for Tesla. Now, before the deal came through, they had two huge hurdles. So one of them was Chinese regulators. They were questioning whether the company had taken adequate precautions to protect their data. So that was one of the big concerns. And the other big hurdle is that Well, Tesla needed access to extremely high resolution maps of China. So those are the two things that Tesla had to overcome. Now, one of the nice things is that Tesla and also a few Chinese EV makers as well, I think 5 of them, they were able to get approval from authorities and basically saying that their data security precautions were up to snuff. One of the big things that China was worried about is the fact that EVs are using, well, self-driving cars are using cameras. They didn't want the cameras to be able to identify regular citizens around the side of the road. So that was the issue that they had to come up with. I don't know what the exact solution was, but apparently they've come up with a solution to it. In addition to that, Tesla has partnered with Baidu, which is basically one of China's largest tech companies. Baidu is one of the few companies that has the ability to do all of the to obtain all of the high resolution maps of road lanes. So everything has come together for Tesla in China, and that's absolutely fantastic. It's definitely great for their stock. All right, let's see. TD is tumbling. Yes, absolutely. Tesla is building a factory in China, and actually, they have a huge factory now in Shanghai, which is oh, Ian, this is a good one. Money laundering equals clothes. Brian says, I am employed in Prince George, BC. Yeah, absolutely. Now Brian is originally from the Maritimes. I remember this. Andre, sorry, I want to say Andre, but Andre says, I watched your previous video about PDIV. Is it really a good investment to live off of dividends? No, it's definitely a good dividend stock, but keep in mind that if you're living off dividends, so let's say, for example, you've got that retirement portfolio, or you've just got a straight up income portfolio, it's still a good idea to have a good amount of diversification, because even though PDIV looks great, there's never 100% guarantee. They could fall on hard times and they could cut the dividend, for example. So these are things that you kind of where if you're diversified. So let's say, for example, you've got about 10 in there. So let's say you have 10 high income covered calls or whatever it is that you're using to get your income. Then if one of them does have a hard time and all of a sudden cuts that dividend, it's not 100% of your pie that's being roiled or being pulled down. It's only 10%. So worst case scenario, you could always at that point swap PDIV out for somebody else. So just something to keep in mind. Redwater says Prince George once had 5 pulp and paper mills. Yeah, absolutely. Not much need nowadays for pulp and paper mills. But yeah, I know there used to be one. There actually used to be one not that far from where I grew up in Halifax. I think it was called Paper Mill Lake, and you go up there, and a lot of people used to swim in it. Not while that was after the mill. After the mill was left, Paper Mill Lake, but it was named after the mill. All right. Whoops. Sorry. Oh, there we go. Ian says, from what I hear about drivers in China, I think self-driving is worth a shot there. Yeah, absolutely. I mean, as that AI gets better, I mean, and this is one of the things. Even last week, Elon came out and said that Tesla is not a car company. That Tesla is an AI company. So something to keep in mind. And he gets annoyed. He actually, I think, he even went as far to say that if you think Tesla is a car company, you're only investing in them because you think they're a car company, you probably should be investing somewhere else. And I was just like, whoa, he doesn't mince words, that's for sure. Andre says, if Tesla is still good, YTSL at 23% yield must be a good investment. Well, here's the beautiful thing with YTSL. And I actually did a deep dive on them a couple of weeks ago. If you're reinvesting, the yield that you're getting back from them, you're just slightly outperforming Tesla. So you're actually doing a little bit better. So Tesla right now, I mean, they've rounded a corner, and if things keep going the way things have been going this last week, we may have all missed the bottom, other than those who did buy at that bottom. But and YTSL, I think, is going to have a good ride going up with them. So not a bad stock. Not a bad. I mean, for a covered call stock, definitely not bad. So I'm a little bit on the bearish side, on the bullish side. Sorry, a little bit on the bullish side for YTSL. Definitely good. All right, let's drop another membership, and then we'll go into the next news story. Here we go. Give me a second. Click, click, click. A lot of clicking. Boom, bang. Here it comes. Let's see who wins. Always, this is the fun part. This is the fun part. And the winner is Paul Santori. Paul Santori, congratulations. There we go. Nice, nice, nice. All right. Yeah, exactly. Congratulations to Paul. All right, our last story of the day. Work caps are coming back for international students. So starting in September, international students will only be able to work a maximum of 24 hours per week off of campus. So before the pandemic, this cap was set at 20 hours. Then, of course, when we had all of the labor shortages in the pandemic, we scrapped the cap. We scrapped the cap. Sounds like something Paulie would say, scrap the cap. But yeah, we scrapped the cap, allowing them to work as much as they wanted. So, so currently, right now, 80% of foreign students are working over 20 hours a week. And the feds, so the government, they actually thought, well, maybe we can do a 30-hour, but then they were thinking, no, that's still too close to full time. So they sort of made a compromise and went at 25. And the reason they're doing this right now is that they don't want international people using an international student visa to basically use it as a way to sort of circumvent a work visa. So they're saying that with a lot of the things that they're doing to limit foreign workers and to sort of regulate that industry, this was kind of throwing things off a little bit. So they would rather have, instead of somebody coming in with a student visa and basically being able to work full time, and they may not have like the skill sets that we need as a country. They would rather instead have an actual person come in through the normal immigration and work visas. Basically then we get better skill sets, and maybe we'll get some nurses, maybe we'll get some doctors, who knows? But that's kind of where they were looking at for that. So definitely an interesting thing. We don't got a lot in the crypto corner this week, other than, holy banana bread, Bitcoin has been on a slide. They've had an interesting week. Ever since the halving, they've been on a little bit of a slide. They actually made it down to 56K briefly during the week. So that's kind of fun. But here's the thing. Well, actually, you know what? Give me a second here. Let's get rid of the news. Bye-bye news. We'll just go here and gonna get rid of that. There we go. And I am going to give me a second. I just want to pull up the Bitcoin chart here. So boop-a-doo. I have to click on a few different buttons. Share screen. Entire screen. Here we go. Get ready to see a whole bunch of me here in a second. All right. This is what I wanted to pull up here. All right. So this here is the good old Bitcoin chart for this week. So as you can see, and actually, if we go back to the 20th, let's just not even worry about the 20th. We'll just look at this week. So this week we've been on this whole big downward slope. So not very fun at all. Then we sort of peaked out down here, as you guys can see, around 56,000. So that's pretty darn low. But then at that point, we moved up. And it's funny. I had actually charted a little zone in here. I was thinking we were going to get stuck in, and we did. We got stuck in there for, well, a little bit, but then we broke out. And now we're up here into a new zone. So probably I can chart this a little bit too and see what's going on. But this is where we're at right now on the good old Bitcoin price. So basically, that's a $10,000 move on the price of Bitcoin. So you can be sure that there are some people out there making a little bit of money on that. So just something to keep in mind. All right. Let's remove that for a moment here. All right. Now, coming up next week on on our calendar, we got in Canada, not a lot. We got some jobs data that's dropping next Friday on the 10th. And in the US, not a lot going down at all. But earnings wise, we do have some earnings coming out next week here on the Canada side. So, we got Enbridge, Manulife Financial, Sun Life Financial, Nutrien, TELUS, Pemina Pipelines, and of course, Power Corporation of Canada is coming out as well. So definitely some good stocks to take a look at. Now, there's this question here. Give me 1 second. I'm going to bring this back up again, actually. Will leave me on the side this way. I'm fine with that. Give me a second. I'm going to pull up the right one. Oh, here's the whiteboard. Just some stuff when I was looking at it for John. It's funny. We were looking at the Russell. Here's where I wanted to go. Actually, that's not where I wanted to go. I want to come over here for a second. All right, Enbridge, ENB. Let's pull them up. All right, here we go. So let's pull up the Enbridge list here. And look at the last 6 months. So here's the nice thing with Enbridge. I mean, Enbridge, they've been doing okay, and then they've kind of retracing. So they're kind of going a little bit I'm going to pull up a year just to give us a better idea. So here's the beautiful thing. So their earnings report that's coming up, if you'll notice from about here on, so from here pretty much up to here, they've actually had the quarter that we're looking at is not that bad. So they're probably going to have a half decent earnings report. I wouldn't worry about these couple little retracements, but I think overall, it's not going to be bad for them. So just something to keep in mind when you're looking at Enbridge. Now, if we go back to our 3-year, you can sort of see we got a long way to go to get back to some of the highs that we had. But you got to keep in mind too, and this is something I keep telling people as well, with the pandemic. Whoops, sorry, I got too close to my mouse. With the pandemic, every time we have all of this free money pumped into the system, we got a lot of stuff like this. So I'm going to come back. Let's come back to the 5-year. So right here, you can see right here is the pandemic right here. At the beginning of the pandemic, we dropped, everything built back up. Now with this one here, not so much. It's kind of one of the things I was kind of pointing at is that I'm going to come to the 10-year for a second. Yeah, you can kind of see that they've always been up and down. It's hard to see what I was trying to say with energy stocks per se, but with the pandemic, there was a lot of extra money. So this probably got higher than it probably was going to get. So, and actually, you know what? I'm going to take a non-energy stock just to sort of give you this generalization that I'm looking at. What would be a good stock? Let's actually pick a bank stock. So we'll pick, we'll go with Scotiabank. All right, here we go. Scotiabank, we're going to go on the 5-year. There we go. All right. So one of the things is after there's that pandemic drop, you can find that drop on pretty much anything. It's so distinct. But when you look at how the banks exploded after it, one of the things you have to realize is as we made it to the top of this pile, so you're looking at this and you're thinking, oh my God, $93 and we're at 64. So we're easily going back up to $93. Well, not necessarily. And the reason for that is that a lot of this money was that free benefit money because a lot of people discovered, investing during the pandemic. Like, all of a sudden you had time to start looking at YouTube, start learning things. So a lot of that money got pumped into this. And then of course, as we were crashing into the bear market, that's that money that people put in here. They're pulling it now out so that they can do things like pay their rent. They no longer have the supports and maybe they don't have a job and maybe they are like, I just don't want to work anymore. That's where that money is all going. So if you think about it in a way, most of this all in here is, you can almost ignore it, throw it off your list. And when we look at this and say, oh my God, look how far they're down from here to here, In reality, I would even say you could probably look at something like this level right here, and that's kind of more of the realistic. So we're not. I wouldn't say that we're actually down from $90 to 64. I'd say we're down about from 78 on a more reasonable level to 64. So we're still down, but getting back, as we move into the bull market, um, and as we get past the mortgage issue, realistically for a stock like BNS, realistically getting up to about $78, that would be fantastic. That would be absolutely cool. So it's kind of an interesting thing. So just keep that in mind, that these little extra big bumps that we have on a lot of different stocks, that's a lot of that is just pumped in money into the market. You know, that's like SERB and the other all of the benefits that we were throwing, that that people were gobbling up like they were M&Ms. Yeah, they're all up there. They're all up there. So I would just say you almost have to just ignore that part. I wish there was a way I could just sort of create a square or something on this chart. So just one of those things to keep in mind. All right, guys. All right. Now throw your questions here in the chat while you guys are doing that. I will, well, first of all, I'm going to get rid of this for a moment. Actually, no, I won't. Let's go over to Discord. And I'll talk a little bit about what's coming up on the channel. So we have coming up next, we get the 0 to 100K challenge. That will be coming out on Tuesday. I've actually already filmed it, which is fantastic. So tomorrow I just have to edit it. That's not too bad. Channel members, you guys do get to see it one day early. So you guys will get to see this one tomorrow, which is fantastic. We do have a market close coming up on May 8th. And I will give you guys a chance on May 8th to gain another market close. Maybe one on Friday, but we'll see. We'll talk about that then. I do have to put up the new deep dive so that you guys can vote for that. We have that coming up. We of course have our live stream. Now the following week is going to be a fun week. Our first video of the week is that one I've been talking about. We're going to look at the worst stocks ever. So we're going to look at the worst of the worst. We're going to look at stocks that if you had invested in them, holy banana bread, you may have lost the house and your socks at the same time. So that's going to be a lot of fun. We also have a bonus live stream on Thursday night, and that is the channel member exclusive live streams. For those of you who are channel members, you'll get to come to this one. I will probably by the end or either maybe by the middle of next week start asking you guys what you want me to cover. So normally the channel members tell me, come to this live stream with this theme in mind. And then I bring it along and we'll do that. And then we'll have another deep dive. And once again, we'll be back here again. Once again, doing this week again at the end of that week. But that's going to be a great week coming up on the channel. Gotta love it. It's always fun. It's always fun. All right. I guess I can eliminate that now. There we go. Bang. I am back. All right. Ian says, Scotiabank pays a significant dividend. Total return is not as bad as the chart makes it look. No, we're just, we were only talking about the actual value of the stock. But yeah, when you look at that total return, the situation is a little bit better for sure. Absolutely. It isn't right now. The yield is really good on that. Ian says, what's the better place to put extra money right now? Banks or REITs? If REITs, what sector? Here's the thing. A lot of REITs are not going to give you the yields right now that you're going to get on banks. So here's the beautiful part about moving it to banks. And I'm not saying banks have won, but if you put it into a bank right now, while you're waiting for things to improve, you've at least got a half decent yield coming. So, whether it be something like Scotiabank, which has, well, we were just there. I won't bring it back up, but I'll just scroll over and take a look right now. Right now, their dividend yield 6.612%. So not too shabby. Now, I do think that REITs, you're going to see total return wise. I think REITs are going to win initially first. And when we're talking about REITs, once again, Residential REITs, industrial REITs would be two of the ones that I would look at the most. Even the healthcare REITs, I think, are going to do okay. So those are going to give you a better total return, I think, in the short term. Whereas I think the banks, they're going to move up, but they're going to move up slower than I think the REITs will. So just something to keep in mind. Now, of course, you can always hedge your bet, right? If you have some money and you're thinking, banks or REITs, you can always go 50-50. There's nothing saying you can't have both banks and REITs. All right. Sammer says, BTC, nothing will double your money in 10 to 12 months. That's a thing. If everything happens in the direction that it has in the past when it comes to happening, then, the latter half of this year, Bitcoin's going to be doing some pretty cool things. So, but keep in mind, just because it's always done it in the past doesn't guarantee it'll do it this time around. It's a pretty high probability, but it's not 100%. So you always have to remember there's still a little bit of risk involved in that. And the other thing too is because of the volatility, and this is the thing that gets people, even though we know Bitcoin is going to do something wonderful, a lot of times people will get in and all of a sudden, they have a big drop, like $10,000 like we had last week. And you got people running for the hills, selling at a loss. And all of a sudden, they're spoiled on Bitcoin. And then, 3 months down the road, when Bitcoin's pushing 80,000, they're like, what? Why did that happen now? Why did I get out? It's one of those, it's kind of that cycle. It's very easy to get shaken out of Bitcoin because of the volatility. Ian says, I only have one REIT, PLZ. It's a strip mall REIT. Okay. It's not that bad. Yeah, I know the one. Yeah, like right now I've been looking at RioCan. So I've been doing this, and this is in the challenge. I've been looking at RioCan and also Timber Creek Financial, which is not a REIT, but it behaves very much like a REIT. So those are the two I've been looking at thus far. And Andre says, my wife is down 30% with SOT. Yeah. So Slate Office is one of those ones that they're still going to recover. They're still going to be fine, but they're going to take longer. And yeah, depending on, like, most REITs right now, like if you got into even RioCan, if you'd gotten into them, earlier, then you should be down, which is kind of a thing. So you'll be down. It's no way around it, because it's that when you're looking, and this is why I'm saying that REITs right now are a great opportunity to make some money total return wise, because when you're down, like in Slate Office Towers or Slate Office REITs, when you're down 30%, well, that's 30% it's going to recover as the situations improve. So that's a 30% potential to come back up. So because when you look, and all right, let's pull this over. We have to. We'll use we can use Slate. Why not? All right. So when we look at Slate, I'm going to let's go to the 10-year. So here's the thing with Slate. Slate tends to normally be hanging around. Am I on Slate? Yeah, I am. Just it seemed the price seemed lower for some reason. Oh yeah, well that's why, because we're down big time. But when you look at some of these prices, like they tend to hang very flat. Normally a REIT, it's designed to basically pass on the tax. So they don't want to pay taxes on the profits to you, which is one of the reasons that you want to hold REITs in your TFSA or your RRSP. So that way there you're not getting, because right now if you hold it in a non-personal account, so let's say for example you hold it in a cash account or just a non-registered, you're paying 100% taxes on those dividends. So generally, you're looking at flatness. So it will normally stay pretty flat, but right now we're way down. And you can see that right down in here. So this is going to, as the situation improves, as the economy improves, as the rates come down, we're going to move back up to this area. But once you get back up to that area, and this is kind of my strategy with REITs, once I get back up to that area, I'll probably then move to better total return opportunities, because I will have milked that return out of these, and then I'll move it to something that has better potential. Because once the REITs get back up to even maybe up to here, but hard to say. I would say even if it gets up to about there, with this one, so $4.67 roughly, I'll know that there's not a lot more potential there for that REIT other than just being straight passive income. So as a total return investor at that point, I'm moving. I'm moving. It's as simple as that, to something that gives me a better opportunity. Now, in my case, like I said, I am looking at RioCan. So I'll pull this up here, and we'll do the same thing. We'll look at the 10-year. All right, so you can see with RioCan, normally RioCan floats around up in here, up around $25. Now you can see then we popped down, we got back up, we started to move back up to the $25 because that's what RioCan does. But then we had all of the rate hikes and it drove it down. And right now it's at 1784. Interestingly enough, let me just double check here. Give me a second here. 0 to 100. Like I've just started getting into RioCan. Yeah, I got in at 1771. So I'm up a tiny bit, not a lot, but as I said, it's a situation where I can see the 17 going back up closer to 20, probably I would say 25. For me, about 25 is where I'll sell out of that RioCan position and move into something more, into a total return thing. So, I've got a lot of room to grow in there. So just something to keep in mind, that when you're looking at this. Now, it depends. If you're like 100% total income, there's nothing wrong with keeping it. In my case, though, I look for higher returns. I look for higher, especially total returns. So that's kind of where I'm heading for. What is a good residential REIT in Canada? Killam. Yeah, Killam. RioCan is very diversified. Timber Creek Financial. Let me show you Timber Creek Financial. Whoops. No, I don't want that. There we go. Timber Creek Financial. Now, they're not a REIT, but they act like a REIT. All right. I'm going to pull this over, and I'll show you the 5-year. So here we go. So normally, let's go to the 10-year. So normally, as you can see with Timber Creek Financial, they're usually up around $9. And they responded the same way, but now they've been coming back. So they're now up at 761, and I can see them picking up another couple of dollars on their value. And at the same time, they have a nice looking yield of 9.067%. So that's not too shabby. And now, hopefully I answered this, Andre. In the boat that she's in, I probably wouldn't sell. I probably wouldn't, just because I know that there's a lot of room for that price to recover. All right. Ian says RioCan PE is 137. PLZ is only 20. What's up with that? Now, here's the thing. When you're looking at REITs, the price to earnings ratio it's really not that great of a metric with that. So take it with a little bit of salt when you're looking at a REIT in certain cases. Now, in the case of, because here's one of the things. With RioCan, for example, one of the things that they're doing is when they're buying properties, they're taking on excessive levels of debt. And that is an absolute normal thing. It's part of, you can't have properties without, of course, taking on mortgages. So some of these numbers get really, really skewed. But hopefully, and I really would like to do another deep dive on RioCan. But if anything, with a REIT, I would be more inclined to look at the price to sales ratio, just to try to get a more accurate comparison. All right. CC says, there was charting showing growing decrease in halving to cycle max. It showed the cycle will max at 125K US. Yeah. If you look at all of the halvings in the past, the amount of growth that Bitcoin has experienced after each halving has been less each time. So, like, for example, some of the ones, like we had halvings where all of a sudden we 8x'd right after the halving. So we're not going to 8x this time. Something more realistic, like what CC is saying, I think 125 is realistic. I don't think after this having, there's people out there, like I've seen people on the internet saying, "My God, we could probably go to like $500,000 this time around." It's like, no, we're probably not going to 500,000, but 125 I think is probably reasonable, and that could very well be the top of this cycle. So just something to keep in mind. Mind you, now if you really want to believe that we're going to 500,000, all the power to you. And I hope you're right and I'm wrong, but yeah, it has been decreasing each time. But you can argue that this time we have all of the spot Bitcoin ETFs. We've now got the ones in Hong Kong, and they're eating up Bitcoin faster than we can make it. Sure, but I still don't think to go up to 500,000, you're looking at a lot of market cap. That's an insane amount of money flowing into Bitcoin, and I don't think we're there. Ian says, Rio can payout ratio 826%. That would scare me away. What makes you like this stock? I think in the case of Ryokan is I'm not super concerned. Like even, yeah, you can look at some of these numbers. And you're going to find some bad numbers on a lot of REITs because while we've just been through, as I've sort of said before, well, this isn't Ryokan, but this here is Timber Creek Financial. But you can sort of see a lot of these have been in dire needs coming down. So a lot of the fundamentals are really kind of messed up. So when you're looking at an 826%, yeah, it looks like that right now. But as the rates start to come down and as these guys go into recovery, you're going to see some of these fundamentals get pulled back down quite a bit. So yeah, normally 826%, yeah, would scare me 100%. But keep in mind, they're not giving away money they're not making. They're giving away pretty much 100% of their profits so that they're not paying any tax on it. They're not going to like take on additional loans to pay out those dividends. They're not going to. It's simple as that. That's not the way that REITs are structured. So, I wouldn't be too concerned. But yeah, and well, let's see. Well, let's look at the payout ratio. Actually, I don't have the payout ratio here, but Yahoo Finance, yeah. All right, so we go to Yahoo Finance. We'll bring it up. All right, and of course, yeah, Rio, they have a huge one. Well, that's Ring Energy. Completely different company here. All right. I always find some companies I actually have to come in with. Let's see here. There we go. Ryokan down here. So yeah, we come into their statistics. And we come down here, payout ratio. So yeah, there it is right there. So 826.92%. Yeah, I mean, it looks scary. It looks absolutely scary. But look down here as well when we look at their total debt. There's 6.9 billion in debt, which is actually funny. Their total debt to equity ratio is actually still under 100%. So that's not too shabby at 92.72%. And pull up another screen here for you. We're going to go over to Simply. All right, let's log in here. Bring this over. Bang, boom. All right. I think this one I also have to do Ryokan. There we go. So here's an interesting thing here. So yeah, we have a lot of issues with here, but look at this. So right now, the earnings are forecast to go up 79.8% per year. That's huge. That's massive. That's going to show you the direction a lot of these numbers are going to come in at. They're sitting currently at 25.5% below the estimate of their fair value, and that's what we were looking at on that graph, right? Let's give me a second here. Come down here. Yes, I'll use a full report on it. All right, so I want to come down here. Yeah, there we go. There we go. Let's pull this all up here. So when you're taking a look, like you'll see they do have a lot, even though their equity is or their debt's up at 6.86 billion. They have a lot more equity. They have 7.44 billion in total. That's a lot. They got a little bit of cash equivalents, not enough to really be a big issue. But yeah, no, things are absolutely high. There's a lot of debt here. But when we look, I'm going to come down here. And let's just a second here. That's not what I'm looking for. Whoops. All right. And that's just revenue, not what I'm looking for. Oh, of course, the one thing I'm looking for, they didn't do it on this one. Always the way. Oh no, here's what I'm looking for right here. So here is currently. So currently, their share price 17.84. So even though analysts looking at it for 1 year, so within the next year, this thing is expected to come up to 21.38. So you're looking at 19.8% increase in value. But yeah, you do have to kind of look at now. Give me a second here. Let's come back to. All right, I'm going to come here to price to sales. So when you actually start comparing them to other REITs using price to sales ratio, you can see that they're actually not that far out of whack. So down here is like Choice and Smart Centers and Crombie, and here's CT, which is the Canadian Tire one. They're actually not that far out. So it's kind of one of those things like when you have some really high numbers out there, sometimes you have to look at the price to sales, and especially with REITs, I've always found that price to earnings is not the best ratio when you are looking at REITs. All right, so what are the pros and cons of RioCan versus PLZ? All right, well, let's come back here. Whoops. All right, we're going to come back to this one here. So here's RioCan. So as you can sort of see here, whoops, what am I looking for? No, I wasn't looking for that. Oh, it's because I'm still on Yahoo. There we go. That's not where I want to be. Did I? Oh, well. All right, give me 1 second here. We will come over to, boop. All right. Here we go. All right, so let's look at RioCan. All right, and I'm going to duplicate the tab. And we're going to pull up PLZ or PLZ. All right, so you're going to find a very similar story here as well. So when you look here and you sort of see, this is kind of where they average up around 4.5. So they're down a considerable amount. That's also going to come up. So that's kind of good. But here's the thing. When you look at PLZ, let's come down here. All right. So they do a lot of retail. That's where the big issue is. So they're heavily geared in the retail side. Now, some retail, absolutely fine. So, for example, some of the bigger grocery stores, if you got retail units around that, you're fine. But right now, we got kind of the situation where retail is kind of suffering. So retail is getting hit hard, and that's going to slow them down a little bit. So this is kind of the big difference. So when you come back here to RioCan, here we go. Let's pull this over here. All right. So you can take a look that you do have some retail focused, but you have a lot of the mixed use properties. And that to me is what makes the difference with RioCan. So some of the ones in here, so take a look at this. Mostly there's a lot of supermarkets, restaurants, cinemas, and pharmacies. That's good. That definitely helps RioCan a little bit, but there's not that big of a difference between the two. I mean, if you really like PLZ, they're both going to get there. Let's say RioCan gets there 6 weeks faster. What's the difference? It doesn't really matter, but it comes down to, I think, also entry point. Like, RioCan is a little more expensive, so you can play it that way as well. It really boils down to what you find to be the more interesting stock. All right, now look at that. You guys had me distracted for a while. Let's drop another membership. All right. Give me a moment here. I am doing it. There we go. It will be here a second. Who's going to win? I don't know. It's like spinning a big wheel. Instead of the wheel of fortune, it's the wheel of finance. That's it. I kind of need a wheel now. T won. Awesome. Awesome. I don't know who T is, but they won. So that's definitely kind of cool. Yeah, exactly. Congratulations, T. Congratulations, T. Good to see that you won. One of the many lurkers. It's funny that there are people who are here all the time who will never say a word. Because I see them winning stuff and things like that, and every so often I get a word from a few of them every so often. But big huge shout out to the lurkers. You guys rock, which is fantastic. Whew. All right. Guys, if you got any more questions, drop them in. We're heading towards the thing. And while you guys are doing that, whoops, let me pull this back over, get back to live. Yeah, Mr. T. I like it. Mr. T. I pity the fool. I pity the fool who doesn't win a membership. There we go. Ian says, in Moose Jaw, the mall is dying, so they put a strip mall in the parking lot. Oh, there we go. Oh, there we go. Muggsy's in the house lurking today, but Muggsy's not a lurker per se. Muggsy comes out every so often and says something poignant. There's nothing wrong with that. Awesome, awesome, awesome. All right. I still have 2 memberships to give away before the end of the stream, so I'm going to do another one just right away. Just bang, boom. There we go. There we go. Bang. And who will win? We spin the wheel of finance. It's going round and round. Somebody's going to win. And it's Moxie. Holy banana bread. That's funny. That is actually really, really funny. So congratulations, Mugsy. You've won a free membership. Woohoo. Oh, you got to love it when that happens. Yep. Good old Mugsy. I'm going to have a sip of coffee. We got one more of these to give away before we say goodbye. Hopefully we don't have the same snafu we had last time. You guys remember last week, for some reason, I was hitting the end stream button and it just was not working. I think I had like 3 tries to end the stream. So it was very, very humorous just to put it in there. Hey, yeah, no, hey, thank the algorithm. It was the algorithm that did it. Ian says, going to sell my Enbridge at a loss in my non-registered and use the money to buy BNS. Going to do the opposite in my RRSP. Okay. Yeah, well, hopefully you can, because at least in your non-registered, if you do sell your Enbridge, you can use that for tax loss harvesting. So even if it's not this year, but you can still hold that loss and use it against a future gain. So, and at least then switching over to BNS and with them going to be going up, it's not a bad play. It's not a terrible play, that's for sure. And BNS has a good amount of dividends as well. So gotta like that. All right, should we do the last one? Let's just get it done. Let's get it done. Here we go. Boom, bang. It's happening. It's happening pretty soon. All right, here it comes. It's coming, and all right. The winner is Wayne. Wayne Smith has won the final membership of this cycle, which is fantastic. So congratulations to all of the new channel members. Be sure, of course, to catch the exclusive channel member live stream. You guys are also, as channel members, you get to see everything one day early. You get to vote. You get to choose the last video of the month and all of that fun stuff. So yeah, there's all kinds of fun stuff for the channel members. And I'm always looking to find new ways to reward the channel members. So we get all of that going on. And got a congratulations, Wayne, and a party on, Wayne. There we go. Wayne's World. Fun. Good movie for sure. All right, everybody. I guess that's it. We've all run out of conversation. Um, Keep in mind, we are getting closer to that 4,000, and we're going to do an open to close live stream when that happens. So that will be fantastic. I think right now we're about 450 or 440, something like that. Um, anyway, it'll happen sooner than we all realize. Anyway, until then, guys, take care, and we will give you a chance to win a extra market close on Wednesday's close. So if you want to win a Friday close, there will be an opportunity then. So yeah, let's let's have fun. Let's enjoy the rest of your day, and hopefully, if it's warm where you are, maybe today you can pull out the barbecue and have yourself a fantastic evening. All right, take care, everybody.